Hello, everybody. Welcome to what is the last session of the year for OMFIF Sovereign Debt Institute. We've had a very busy and full year with meetings across the year. Over nearly 100 issuers have joined us over the course of our events this year. Many of the market's leading fixed income investors, a select group of investment banks who are very open to the types of high level and detailed discussions that we have within the SDI. And through those often lively and interesting discussions, one of the topics that's come up over and over again is the question of market infrastructure. Now, we all know the discussions around this, that this is an out-of-date market. This is a backward-looking market that needs to embrace new technology and digitalisation to improve efficiencies in various areas. And that's a very important discussion to have. These discussions are often yield differing opinions as well. So we decided to grasp the nettle and do a survey of market participants to find out where they feel market infrastructure is letting them down, to see where improvements may be made and what impact those would have. So my team here at OMFIF have been working very hard on the survey of close to 40 market participants across issuers, investment banks and investors. And in a moment, we'll reveal the findings of that piece of research. And then we'll have a discussion with a very good group representing different parts of the market about what this all means. I suppose when we think about it, we have to think what needs to be done, how are we going to do it? And then if the market makes that investment, what will the return on investment be? How will the markets change? And I'm sure we have a lot of people listening in today from the issuer, investor, intermediary community, but also many new fintech firms that are looking specifically to address some of the topics here, as well as exchanges and clearing houses and other parts of the public sector and bond markets more generally. So on that note, there'll be a brief pause as I hand over to our head of content, Burhan Kadbai, who will be presenting the findings of the results and leading the discussion that we have. We're very hopeful that this is a topic that can be explored more deeply over the course of 2024, both in our big sessions, but also, I think, in dedicated sessions that bring these parts of the market together. So hopefully you will all find the results of the survey interesting. We'll have a lively discussion and there will be much more where that came from. So on that note, I'm going to hand over to Burhan. There'll just be a brief pause as he comes into the studio. Thank you very much indeed for joining.
Hi, good morning, everyone. So I'll now proceed with presenting the findings of our inaugural bond market infrastructure survey. So I'll just share my screen and then present the results. So hopefully you can all see that nice and clear. So this is our inaugural future of bond market infrastructure survey that we conducted over the last few months. So yeah, as Clive said, we're looking to sort of really explore the inefficiencies in the bond issuance process. I think everyone knows about all the inefficiencies, all the problems, and also look at possible solutions to sort of address some of these inefficiencies. So this survey features insights from 37 market participants across 22 jurisdictions. That comprises 20 public sector issuers from both the developed and emerging markets. So sovereign DMOs, agencies, supranationals, all the sort of public sector universe there, and the rest of the market participants representing asset managers, banks, central banks, and service providers. So the first question we looked at is looking at the bond markets as a whole. So, what are the biggest inefficiencies across the whole bond issuance process? And here it's quite clear that workflow processes represent the biggest challenge or the biggest inefficiencies in the bond issuance process. Over 50% of respondents selected this as either the largest or second largest inefficiency, followed by allocation and post-trade processes, both at 34%. And workflow processes obviously being the day-to-day aspects of issuing a bond, including the documentation, which is something that we hear frequently and which was mentioned in the survey frequently about it being needing to improve basically, and being quite manual and needing to be improved. And then we move on to the pre-trade aspects of the bond markets, and here standardisation promises the largest pre-trade benefits based on the survey. Just under 60% of respondents highlighting the standardisation of legal documentation as a key area to improve efficiencies in pre-trade processes, and also 55% selecting the standardisation of order book processes, and 52% asking for better price guidance from secondary markets. And then the standardisation aspect continues in the post-trade part of the bond markets here, although there is less consensus, but standardisation is also a key area of improvement highlighted by respondents to address inefficiencies in post-trade processes. 27% selecting the standardisation of investor identification and classification as the main improvement. Other improvements for post-trade processes include a faster settlement cycle and instant price discovery. And we'll look at the go into detail about the settlement processes in the next slide. Where despite the desire for a faster settlement cycle, you saw in the previous slide, there is a lack of consensus on what the settlement cycle should be for syndicated bond issuances. I mean, the most popular selection was T+3 and T+2, selected by 28% of respondents each. However, 25% said settlement should be variable, and only 6% of respondents selecting a settlement date of T+0 or instant settlement. We also looked at the secondary markets. We asked respondents about what the main improvements could be to secondary bond market trading. And here, 77% of respondents identified an increased transparency as a priority, followed by 69% asking for improved liquidity. And here we're looking at the adoption of DLT and blockchain. And here it's quite clear that the majority of respondents said they were not looking to adopt distributed ledger technology in their debt issuance, 71%. Although this is taking into account all the market participants. If you take out the issuers, this number is slightly higher, as we'll see in a chart later on. And also still too early for the adoption of artificial intelligence, with 86% saying they weren't looking to adopt AI in their debt issuance. And this is the chart I was referring to. So with DLT and blockchain technology, the number is significantly higher when you take out issuers. So investment banks, service providers, looking at DLT a lot more than SSA issues there, which I think is quite interesting. And then the final few slides here about operational security risk at the forefront of market participants' concerns in the adoption of digitalisation and move towards digital bond markets. Here you quite clearly see operational security risks at the forefront of concerns, and some of those operational risks are and security risks include cyber risks and technical settlement failure risks. So in conclusion, an increased standardisation offers the most improvement in the bond issuance process, pre-trade and post-trade. There is a desire for faster settlement, but there is a little desire for a wholesale move to T+0 or instant real-time settlement. And some market participants are approaching new technologies, but cautiously, and security and operational risks are some obstacles to the digitalisation of bond markets. So that's the presentation. Hope you all found that useful. I'll stop sharing my screen now. Now we'll sort of go into some of these results in a bit more detail with a great selection of senior market participants here to discuss this. So we have a good mix of issuers, investment bank, and an investor here. So from the issuers, we've got Antonio Juan Belt, Senior Financial Advisor, Debt Management at the Ministry of Finance of Uruguay. We've got Trygve Freyr-Harsen, Senior Debt Manager, Government Debt Management at the Central Bank of Iceland. We've got Victor Sabo, our investor representative, investment director, Aberdeen, and investment bank on this panel as well, with Asif Joani, managing director and head of DCM syndicate for EMEA at HSBC. And also just a reminder for the virtual audience, if you do have a question, please do submit that. You can either send that through the Zoom chat, or you can, if you want, switch your camera on and ask the question direct to this panel here as well. So without further ado, we'll get stuck into the survey results. And I think a good place to start was the first slide about workflow efficiencies and being the biggest inefficiencies in the bond issuance process. So maybe Asif, I'll come to you from the bank perspective. What specific aspects of workflow are challenging, and I suppose what are some of the solutions to sort of fix that?
Yeah, thank you very much, Buran, and thank you for sharing the results of this survey. I think, as you say, it's a very important part of the bond market issuance side of things, which often doesn't get looked at and does need a light shone on it. So thank you for doing that. I think in terms of workflow process, clearly, as you mentioned, that includes some of the doc issues, that includes standardization issues with investor IDs, and other things. And I think those are clearly key challenges for us, because again, you talked about quicker settlement cycles towards the end of the survey, and there was a bit of a pushback on that. And I think predominantly that pushback comes because the current process is very manual, and the current process is very inefficient, and without having a more efficient, less manual process, there is no desire for quicker settlement as a result. So I do think they go hand in hand. I think the major issue we face at the moment is around the documentation side of things, includes the legal drafting of the documents of the transaction itself, the subscription agreements, the final terms of the transaction. We do note that there is a bit of automation that has been introduced to this area, but there is no level of standardization, and it's not widespread enough at the moment for it to proceed. The other areas that we also find a little bit challenging have been around ISIN generation. Again, we note that there has been some level of automation on the workflows side here, but again, quite often for an ISIN generation, there can be email chains that are going back and forth between the ISCDC and the documentation house on the transaction, and that can take quite a considerable amount of time and effort to get going. And as I say, it's a very manual process at the moment. Why is that important in terms of ISIN generation? I think you have the investors on the call as well, they can speak to it, but we've had situations where ISINs have not been available till 24 hours later of a bond pricing, and that has stopped in some instances for some investors booking tickets, secondary market trading. So these inefficiencies are real, and they do have a real impact as well. And if I was to highlight two, as I say, the documentation process for me would be one, and then some of the other plumbing around whether it's getting ISINs or getting transactions in terms of trade bookings, etc.
Okay, yeah, thanks, Asif. And just to follow what you were saying, I mean, where are we in the process of automating and electronifying the document flow? I mean, obviously that as you mentioned there, that's quite a key hurdle. A lot of that is manual. So where are we in terms of sort of moving that documentation process quicker and more automated?
I think you clearly have a few propositions out there in terms of, the fintech companies that you mentioned earlier that are working towards automating that process, using, in some instances, AI or machine readable program languages, etc. And I think we are making progress there. I'd be very surprised that in 12 months' time, if we're still sitting here discussing documentation, at least as a huge issue. But clearly, whilst the technology is there are still reluctance to have it widespread because of compliance issues in some instances, but in particular also because of the lack of standardization. That fragmentation is still holding back the widespread adoption.
Okay, thank you. And moving to get an issuer's perspective on this, Trygve, from a government debt management perspective, do you echo some of the some of the comments made by Asif there in terms of the workflow inefficiencies, and that mainly being from a documentation perspective?
Sure. Yeah, thanks for having me on. As I'm stepping in last minute from my Ministry of Finance counterpart, I might not have as detailed answers on the insights as my fellow panelists. But keep in mind that we are a very small issuer, at least a tiny issuer. So we issue around, so our outstanding issues are like 1.5 billion euros currently. We go to the market every 2 or 3 years. So these issues are not very pressing, at least for us at the moment. But what we have found is, I mean, the pre-trade processes for us are the most demanding, particularly the preparation and updating of documentation for the EMTN program. That could be streamlined. Also, I mean, standardized legal documentation would be great for us. But these issues really don't pose significant challenges at the moment, at least, because of our rare and small-scale international market engagements.
Okay, yeah. And what about the standardization of, you mentioned there the pre-trade aspects and the challenges. And, as we saw in our survey, the standardization of legal documentation was highlighted as the main sort of way to improve the pre-trade aspects. In terms of order book processes as well, do you feel like there needs to be a standardization there? Is that something that you find challenging as well when you come to the market?
Well, it would definitely help, but we haven't found that to be a hurdle, at least in our recent issues.
Okay, fine. Thanks, Trygve. And Antonio from the Ministry of Finance of Uruguay, is this similar sort of challenges that that Trygve's highlighted from Iceland there in terms of your issuance? I know you're not a super frequent issuer as well, but what are some of the sort of challenges you have in terms of your issuance in pre-trade?
Yes, as you mentioned, we are a very small issuer, as the case of Harrison explained, my colleague from Ireland. So basically, the main the main challenge we get in the office. By the way, we also tap once or twice in the international market with a similar size that Harrison mentioned. In terms of dollar, 1-point-something billion per year, or 1.5, not more. So basically, we are not available. So the more, I would say, the hard task is the workflow before, because when we decide to go ahead with an external deal, we have to prepare an RFP, for proposal for banks, to hire lawyers, and to start to prepare documentation. Usually, we in the U.S. global market, which is the main market for us globally, we have to also to register some information in the SEC on an annual basis. So it takes a lot of time, all this workflow, also to decide the operations, because sometimes we add an LM component and a liability management component to the exercise, to the financing exercise for the government. In the previous transaction, also we issued the first bond linked to environmental goals, which was something innovative, and we had to prepare all the documentation, and we have to discuss with all the ministries and also with other international organizations because these two goals were linked to the Paris Agreement in 2007, 5 years ago. So it is a very large process, and I think this is the main challenge. Then after we go or we make the pricing, the allocation is a very easy process, because we have been discussing with the underwriters in the previous transaction. We have some memory. So in every transaction, after the transaction, we take into account what can we prove, and for the next RFP, sometimes we stress to the bank in the terms of allocation. We would like to, because it's a book building process, and we would like to participate. We will have time to decide which are the winners of or how will be the allocation process. And then in the post-trade, I think the things are more normal. Settlement could be, as you mentioned, 3+3 is only a new money deal, but if we add an LM, of course, in more time, but this is because of investor need more time in order to bring the old bonds for getting the new benchmark. So so I think the point is in the workflow.
Yeah.
We have to improve is in terms of workflow philosophy. Yes.
Yeah, we'll look at the post-trade aspects in a bit, but you mentioned there the workflow being the most challenging aspect of your issuance. And at the moment, when you're preparing to come to the markets, as you mentioned, the RFPs and you're preparing documentation to bring your issuance to the market, is all of that done manually right now?
Sorry?
Is all your preparation, all your documentation, is that done manually? There's no sort of electronic.
Yes, because we have we have a lawyer and 2 or 3 colleagues that are in charge, and yes, and to be honest, we feel comfortable doing that because we have a lot of controls, from the audit office and other controls. So we like to go in a very smooth way, but manually, yes, and we have some colleagues that they put a lot of effort and a lot of hours in terms of to try to be more efficient in the process. But at the end of the day, yes, we are a small sovereign and we are not innovative in that sense.
Yeah. And just a final question on that. I mean, how long does that process take? So when you're looking to come to the markets, how far in advance do you have to get everything set up because of the, obviously the challenges of getting everything prepared or documents prepared? How was that? When do you start that process before issuance?
Well, it's depend on the transactions or the type of the transaction, because when we go to the external market, as I mentioned, we can issue in US dollar, but also we issue in local currency, but in a global approach. And if we issue in local currency, could be nominal pesos or could be also indexed to CPI. And recently, as I explained, we are trying to include environmental aspect to the financial exercise. So it's dependent on the transaction, but I would say that at least 3 or 4 months before, on average, but maybe it can be 1 month or can be 6 months. Also, then it's dependent on the market condition, because be ready, but if market conditions are not okay, you have to wait. So the mistake that we cannot commit is to not be ready when the market is ready. But in the other side, we have a target. We start with the process, with the workflow process, and try to accelerate to be ready on a very manual way. And then we have a go or no go call with the banks and with the authorities and decide if to go ahead. But it's something that we have to adapt to these circumstances, and we are aware that it takes some months for being ready.
Thanks, Johnny. We'll come back to you on some of those other challenges, but I want to bring in Victor here from Aberdeen. From an investor perspective, are some of these challenges things that you face as well, or are there other different challenges that you face from an investor perspective?
Oh, thank you, Burhan. It's a pleasure really to be here at speaking this panel. And just as a perspective, so I'm in emerging market debt team, and we are kind of typical long-only real money investors. And I would kind of like to take you through the process we are facing from our side, and that will obviously present some of the challenges we face. So when we have a new deal coming, obviously we need some time to digest, to go through the documentation, to typically when there is a roadshow, it kind of gives us a bigger lead time, but quite often when there are market taps, then we have quite a short time to go through the whole process. Especially kind of we have seen in recent past with treasury market volatility, we had kind of periods where no one dared to tap the market, and then suddenly many issuers saw a window of opportunity and opening, and suddenly you had a bunch of issuers, sovereign, quasi-sovereigns, and corporates coming roughly at the same time, really kind of draining the resources on our side to really do the appropriate due diligence there. One thing which a bit personally and annoying me a lot is when issuers come with super inflated IPTs. So basically presenting their coming bond as extremely cheap to existing curves, driving in probably interest which would not be there, and then massively kind of tightening through the whole process. We might look at less deals if they were initially coming with more realistic pricing and not waiting for us kind of to drop out. Now, in terms of the workflow process, the first difficulty, well, I can say the second difficulty we face is that obviously there is the new bonds being created are not available on Bloomberg, although basically all the details from the new bonds, except the kind of the price, the coupon, and the size are known, could be there, but we don't have that. So we have to, typically we use some proxy bonds, which for countries which have kind of decent curves and many bonds, it's easier. For new issuers or those who don't have many bonds, it's quite difficult. And they need these proxy bonds to be able to process the new bonds in our systems. It has to be checked against compliance. Now, if we decide to participate in a new issue, we might that might be eligible for a range of portfolios, and we're talking about over a dozen different portfolios with separate guidelines, with their own restrictions, rating, size, eligibility, Reg S 144A. So they're all different. So not to have manually go through all the portfolios to check all those points. It has to go through our systems. Now, to be in the system, you have to have a bond. So that's why we use proxies, which obviously is not ideal because they might not have the same characteristics as a bond being issued, but that's kind of the second best we have. It makes the process hard to automate, and also having some kind of a good representation of the bond also would help us from the risk management perspective, because we could just put through our risk systems and see immediately kind of what adding different position would mean in terms of the different risk metrics for the portfolio. So once we decide that kind of we participate, we selected all those portfolios which are eligible. We obviously have the size of our demand, and we submit it to the leads, and that is a manual process. I mean, our dealers have to type in to all the leads. On the lead side, I guess Asif knows it much better. Probably there's hundreds of messages or emails coming in, and there's a manual process. Obviously, the risk of errors, typos, missed messages. So that is something where standardization or a process could be made. Let's say, might be harsh, excluding the middleman, or kind of excluding the manual part of that process could be really useful. We are seeing some more automated primary book building mechanism, direct books, for example. We haven't seen that in emerging markets yet. That is something which developed markets kind of started to apply, although that's also in infancy, but that is something which would be great. Asif mentioned the delays in ISIN, which is indeed one of the big problems for us, because basically we can't send the settlement instructions before we have the ISIN ready, and that indeed can delay the whole settlement process. So it would be good if Bloomberg could create, a dummy ISIN, or basically provide one reference point for the whole market. That could be good. In terms of the book building process and allocation, I mean, it's a bit of a black box. I mean, I do understand and appreciate that there are some really useful elements in that. It gives the possibility for the issuer for kind of tilting the allocation. That might actually be good for liquidity. If there is more allocation, if you see kind of strong demand from domestic players, but then you allocate more to foreigners, you can be sure that kind of when the bond goes live on a secondary market, there will be probably more demand for it. So liquidity consideration, you might, the book builders might be able to judge and exclude inflated orders if there is some fast money. So there is this possibility. but there is also trade-offs of not having visibility into that process. There are some arguments could be made that from the issuer side, alternative methods, if, for example, you applied an auction type approach like we see in the local bond markets, could be also useful, might lead to better pricing for issuers, definitely could make the whole process more automated. But as I said, it is really a trade-off. So I think it's more has to be done on a case by case basis. Pricing wise, also sometimes there are delays. Obviously, there's time zone differences, so we might not really know the final terms and the allocations before after kind of we've gone home, and it's for next year. So these are kind of my initial thoughts on the issuance process, and yeah, but I'll probably stop here.
Yeah, thanks, Victor. No, I think you made some good points there about it's perhaps not perhaps not beneficial to automate the whole chain here, but certain aspects would be useful. And how long does it take to get an ISIN at the moment? Obviously, at the moment, there's no dummy ISIN you mentioned there, and that can hold up things in the from post-trade aspect in the settlement. So you have to wait for the ISIN to come, and does that take a few days? Is that?
It's not a few days, but it's definitely happening, obviously, after the pricing and after the whole process is completed.
Okay. Moving on to some of we've talked about workflow here in quite detail, including allocation and the pricing aspects. It'd be quite interesting now to move more into and I know we talked a bit about standardization in pre-trade, as we saw in the survey. That promises the largest pre-trade benefits in terms of standardizing legal docs and order book processes. But I want to bring in Trygve again from Iceland. In terms of your pre-trade aspects, is it just legal documentation on order books that are needing to be standardized, or would you benefit from other things as well, like better price guidance from secondary markets, a central investor ID? What are your thoughts on that?
Yeah, I mean, a better price guidance from the secondary market would definitely be helpful. The problem for us is that our issues are so small that usually they're bought by buy and hold investors, so they're not actively traded. So the price guidance is not optimal for us. But I would echo that what Mr. Hugenbelt said, that it's really a little bit of a black and white markets for the domestic bonds, the ISK bonds or the Euro bonds, because just issuing a new bond here in Iceland, going through all the process to settlement takes about 2 weeks. Just this process for an Euro bond takes more like 2 or 3 months usually. So of course, we benefit from being such a small market and only have one securities depository and only one secondary market. So that is definitely helpful, and so it's really more automated here than it is in the international market. So you just see how much time you can save by having a more automation. So yeah, that would definitely be helpful.
Okay, thanks, Trygve. One aspect I wanted to address as well was the sort of standardization of order book processes, which was mentioned as well in pre-trade. I mean, coming back to you, Asif, from a bank perspective, what are the current issues with the order book processes, and how can some of those be made more efficient?
Yeah, sure. No, I think it's a very good question, but I actually was positively surprised, that the book building part of it, as you can see on your slide there, is actually towards the lower end of the spectrum in terms of, seen as an inefficiency at the moment, or at least compared on a relative basis to the others. And that's very good to see, because there's been a lot of investment in the book building process, some that Victor had highlighted as well, in terms of the direct investor engagement. You have investor access, you have direct books. So there are, initiatives that are out there that have made that possible. I think in terms of to the question, you know, what are still the kind of areas of growth there? I think the areas of growth are twofold. One is actually linked to the allocation process, but before we jump into that, the second is standardization with investors' own platforms, right? So Victor was explaining how they have their own system and they have to input manually. So whilst we can send information directly to an investor from the book building system at the moment, if it cannot speak to the investor system, then you have to have that manual intervention. And so getting these book building systems, whether it's IA, whether it's direct books or whoever may come in the future, to directly connect to the investor's current systems is going to be very important. And there is work going on that. Unfortunately, it's been too slow, or slower than anyone would have liked to have seen. But we are seeing some progress on that front. And there is a lot of money going into the investment from the bank's perspective on book building systems in general, which is again showing some benefit. The other part of the book building systems that is used, which is showing a larger inefficiency, is the allocation side. And I'm actually a little bit surprised to see that, you know, higher than pre and post trade process, you know, for issuers and other participants that have actually answered. I think from an allocation perspective, all the tools are there to allocate within seconds. I think what we have to distinguish, however, is some of the points that, again, I think Victor highlighted, where that, you know, there are nuances to the allocation process as of now, which do give optionality to an issuer intentionally, and we don't want to take that optionality away from the issuer, nor do the issuers want to give it up. And those, you know, are clearly sometimes manual interventions. But what would be a game changer in terms of streamlining the process, it's actually highlighted on your second slide, or the slide after this, I should say, where it comes to, you know, standardizing investor IDs and classifications. Because if you have that, you can automatically allocate a book within seconds, and then you can have some manual tweaks on top of that. So you then are addressing the bond issuance on the day of the bond issuance, the inefficiencies that exist, and allowing for a more compressed timeline in terms of execution, which then means, you know, you will be able to get the ISIN quicker. You can get an ISIN, you know, before pricing as well, but it allows you then to finalize all the details. You can also then make sure that allocations and pricing are happening at a more accelerated timeline. So to Victor's point, you know, you're not getting them too late in the day or different time zones. So I think those are the 2 points there. To summarize, you know, positive momentum on the book building side, but clearly the data set of the investors that exist is a huge problem.
Yeah, thanks, Nassim. That's a good segue into the next part, which I wasn't going to go into about in terms of the need for standardizing investor ID classification. I mean, you mentioned how important that is. I mean, I think in Europe there's been talk of a legal entity identifier. How has that discussion evolved, and would that solve this issue of a sort of common standardized approach in this area?
You know, the LEIs are inexistent as of today. Unfortunately, I don't think they fully solve the issue because you know, they're not readily available in some of the systems, first of all, and secondly, you know, the classification isn't necessarily standardized just because you have that investor ID. That can differ from bank to bank, that can differ to deal or issuer by issuer in terms of how they look at the things. And then there's the fund level data as well, which is not necessarily always linked to the LEI. So it is a step in the right direction, but it doesn't quite solve the issue.
Okay, thanks, Stephen. Antonio, coming back to you then, we sort of talked about some of your challenges and your issues when you come into the market from a workflow pre-trade aspect. And I just wanted to ask you about some of the challenges that you face in post-trade. You mentioned settlement there as well earlier. I mean, is that something that you'd be in favor of, a faster settlement cycle for your transactions?
No, I think in terms of the settlement, you know, basically we usually hire the underwriters, which in our case basically are three banks in every case. So they're in charge in all the post-trade process. Of course, we are more close with the central bank, which is the financial agent of the government. So they have to be in contact with the banks. But in terms of the settlement process, I think it's for us, it's worked very well. I don't, and of course we are. We put in contact with investors directly if they have any problem. But given that we make a very plain vanilla transaction, we don't see any problems, at least in the recent exercise we have done. I just the standardization. In particular, I would like to focus on the standardization of the order book process, because it's something that we have been discussing with the banks and put more and more emphasis. You know, the day we launch the transaction, the provide us a link, internet link, when we see the screen, and we see how the book is evolving. No, of course, in Europe, which we have 3 or 4 hours difference, we see first the European investor first in the early morning, and we take it into account for the allocation process the moment the investor enter, and then if when you know the book go subject and there is some tightening in the spread, if they maintain or if they drop out. But then in the allocation process, with that's something that we have to discuss with the underwriters, we ask them to have more more activity, because sometimes in some years ago the syndicates of the bank, they gave us only 20 minutes to decide. But given that this is a process that at the end of the day is the Republic that has the last word, we take more time for analyzing every investor and trying to allocate in a very efficient way to provide more liquidity to the market, and to, of course, to see and to award the investor that have present since the early morning, etc., etc. I think this is something that we have been working a lot in recent transaction, and I think we could achieve a very standardized process, taking into account that we are a very small country and with all the restrictions that we have.
Burhan, if I may just
sorry,
jump in. Sorry, just to pick up on the first point Antonio was making. So I think Antonio hit the nail on the head. As an issuer, I don't think there is any huge desire to have a quicker settlement cycle, right? I think that came out in the survey results from your side itself. And I don't think you should force a quicker settlement cycle unless the rest of the chain is also automating, so it's reducing workload and making it a more natural progression, right? But I think to Antonio's point, they are asking the underwriters, the banks, to take that task on, and rightfully so, right? That's why we get paid a fee. But from the bank's perspective, there is a large benefit of having a quicker settlement cycle, because 2 things. One in particular, which is key here to me, is counterparty risk. You know, if you have a T+5, T+7, you know, new issuance, as an issuer, once you deliver the bonds, because the banks have signed a subscription agreement, we are then liable to give, if we sign an underwriting subscription agreement, give the funds to the issuer. So issuer indifferent, as Antonio said, not completely indifferent, of course, but they're guaranteed the cash coming in. As a bank, we have then that counterparty risk with the investors for that X days, whatever that settlement is. And that's the issue where we are facing counterparty risk. We have to, as with any risk in a bank or in a financial institution, you have to account for it. You have to mitigate that risk, and sometimes that involves, you know, setting aside capital or having inefficiencies that are costing the banks money. So I think from that perspective, there is a desire more generally to move to a quicker settlement on any transaction in financial markets, in particular around new issuance, where there are clearly efficiency gains to be had, and a reduction of counterparty risk is in general, you know, a more positive thing to have.
Yes, sorry, I take your point, Asif, and this is the reason why beyond the settlement process, for example, in the execution, we always do in a intraday execution, just to try to mitigate some of the risks that you mentioned. In terms of settlement, for example, in the last transaction that was very simple because it was a reopening, reopening of existing bond, we and was only for new money. We would agree with underwriter T+3. But the problem, in our case, basically, frequently when we go to the external market, we add an LM component. So for investor demand more time because they need to bring the old bonds that sometimes are very liquid and they need time to get in. When the day when we do the settlement, some investor cannot bring the bonds and have some problem. But I think it's something that I'm talking a very special situation because we as I mentioned, we always or most of the time we incorporate an LM component, but I think it's because of investor demand more time in that sense. So as you mentioned, there's a trade-off between how to mitigate the risk, counterparty risk, but at the same time to provide more time to investor to get the old bonds for the transaction, for bringing to the transaction.
And maybe just add on one element to that. I can agree with these points and also a trade-off. One thing which probably argues against the really long settlement cycle is that although the price discovery starts basically from the moment that the pricing happens, because there is a gray market, but we as a kind of long-only house, we, for example, are not playing the gray market. We have internal rules which forbid us. And simple reason, obviously, there is a possibility. It's quite rare, but we have seen examples of deals being cancelled for whatever reason. And if you're selling a bond in a gray market, you might end up in a short position, which we cannot be in across a lot of the accounts. So we are out of the gray market, which means that as long as actually the final settlement does not happen, we have no access to that market. And kind of if we had a low allocation and we want to top up, obviously we have to wait till the whole settlement process completed, and only after that we have access to that market.
Okay, thanks, Victor. And that's quite an interesting back on settlement because it sort of seems based on that it's not really as the survey shows, it's not really the bottleneck. It's it's not one size fits all there. I mean, the banks want a quicker settlement. Some of the issuers aren't so keen on it. But just one more point on this is I think it was quite surprising how few people were keen on an instant settlement. And Asif, come back to you. Why do you think that is in terms of why is there such a low desire for T+0 issuance?
It's a very good point. I think it comes back to the earlier points we were making. There are so many other manual processes and manual intervention required in the new issuance setup as it is today, that because of that, there is no desire to have a kind of atomic or instant settlement because it would require a huge amount of pre-work to line up a single transaction. And we saw that when we were doing a transaction for the EIB using our digital platform, so the HSBC Orion platform, which is a private permission blockchain platform that we've used a DLT issuance for, and we had the optionality in that to do a atomic settlement, and indeed some, I believe, issuers have done atomic settlement for some of their blockchain issuance. But when we were speaking to investors, to your point, they said there was no desire to do that because they would have to at the time pre-fund the cash, have that cash available. Quite often investors don't necessarily just have the cash available. It's either through repos or other facilities, or maybe have to check with their custodians in terms of the actually delivery of that cash. So then you're talking about developing a market infrastructure that allows for atomic settlement, but the rest of the system's just not ready. So it's actually creating more work than benefit. So I fully agree with, as of today, a faster settlement cycle can be counterproductive, and that's why I want to focus on, as we said earlier, the rest of the infrastructure, whether it's the cash side of things, whether it's the documentation side of things, the workflow processes that you said need to also automate to the extent where at some instance in the future, and maybe not the near future, we get to a instant settlement cycle. possibly, yes, but till the rest of the cash side and the rest of the documentation side is there, it's counterproductive at this stage.
Okay, so even though it's possible, we've got to focus on fixing the other inefficiencies around that and the technology and the payment systems and.
You know, we often say it's like having a Ferrari ready, and we've bought the Ferrari, we've got the engine all tuned up, but the speed limit's 30 miles per hour. So what's the point, right? So until we can get the roads to be better and up that speed limit, you know, you're not going to be using the full power of what you have in terms of the technology as of today.
Okay, and just coming to you, Trygve, we've heard from everyone else about settlement. I mean, do you sort of agree with what's being said there about the settlement? And what are your thoughts on that?
Yeah, I'm sort of echoing what Mr. Jungfeld said. I mean, it's not really a concern of ours to have like a shorter settlement. We basically our last two trades have been like T+5, and that suits us very well. I mean, we have we like Uruguay, we hire banks to do the book building and the settlement. So it's really not, considering how seldomly we go to market, it's not a really pressing issue for us, at least at the moment. I think you're on mute.
Sorry. I was going to ask you then, if settlement's not a big concern for you in terms of the post-trade aspect, what are some of the bigger issues for you as an issuer in Iceland?
It's more of a it's more of like a pricing issue, and it's also, I mean, we might at some point in the future, like we might have to tap the market more frequently and to a bigger extent. So I mean, these aspects would be more they would be more important for us than they are now.
Okay, thank you. I see there's someone with a camera on. Did you have a question for the panel, or do you have a comment to make, or have you just put your camera on?
Yeah, hi to everybody. I joined a little bit later, but I remember we also filled in the inquiry about these topics before, and I remember we also ticked the box that or didn't tick the box when it comes to allocation. But when I hear Asif comment that actually the whole point is about the process till you get to the settlement is the one that you need to make it more efficient and then quickly allocate and quickly settle, then of course it works. Sorry, I didn't need to introduce myself. I'm representative from the Treasury of Latvia.
Okay, thank you there. Thank you for that. Okay, moving on to the next part of the survey results on the adoption of DLT and blockchain. And you know, this is quite a good segue from settlement, because in some ways that could improve some of the efficiency and speed up settlement, the use of blockchain technology. As you saw from the survey, the majority of participants we said that they weren't looking, about 70% said they weren't looking to adopt a DLT. I want to know if this was quite a surprising figure. Maybe coming back to you, Asif. You've worked on some of these transactions you mentioned with the EIB. Was that quite surprising to see that, or is that just a representation of the fact that the market hasn't quite sort of evolved and moved into this world yet?
Yeah, I think it was a little bit surprising to see around, not necessarily, I guess the question wasn't necessarily talking about having to issue as of today around blockchain technology, but even a future view seemed to be a little bit on the dimmer side of what we would have expected. I think that's probably twofold. One is in terms of especially the banks involved, including ourselves. Maybe we haven't done as good an educational marketing exercises as we should have. And the second is, again, it and I can understand the second part in particular. It comes to be with the frustration of trying to add new technology probably to what without focusing on some of the other infrastructure points that we've discussed, right? Because nothing can really happen in isolation. Even using DLT, we're adding new technology, and we're allowing for a faster settlement. But if we don't, as I said earlier, create the rest of the infrastructure around it in a more efficient way, it's a little bit pointless in terms of having the ability to do a faster settlement, but none of the rest of it works. So I think from that perspective, there's probably a little bit of a fatigue from the current infrastructure that's also holding people back in terms of adopting newer technology. And I can understand that. Why we like DLT, and why we think it's an efficient way of using a new settlement settlement cycle or settlement area of settlement, I should say, is because, frankly speaking, it allows for a clean break from the legacy systems we're using. And we quite like that because, new technology can be bolted on to the current systems, but the integration to the current systems is a huge issue, both from a tech and spend perspective. So starting with a new technology like DLT or blockchain that allows you to start from scratch, blank canvas, and do it properly, we quite like that. We do realize that, as I said earlier multiple times, that in isolation itself, that doesn't solve the problem, but it's a step in the right direction. Now we have to wait for the rest of the infrastructure either to plug in an efficient way or also have some level of form of digital assets and digital money that allow for a new system to be created on the new ecosystem of blockchain, whether that's CBDC or whatever. Now, that's a whole different topic, but that can explain why there's some reluctance from the issuer and investor community to accept DLT. And before it goes to the mainstream and before that reluctance is removed, there's a few steps in between that have to be taken by banks and other providers around DLT to integrate with the current systems to make it more mainstream. And that will hopefully then mean more people are comfortable with it.
Yeah, thanks. Victor, what are your thoughts from an investor on DLT products? Because it does seem that it's sort of catching on with banks and issuers, as he was saying, but with investors, that conversation hasn't quite sort of taken off. But what are your thoughts on this?
Theoretically, that would be great, but in reality, if you kind of put together the costs and the potential benefits, I just don't see yet that you could justify the outlays, especially kind of now when the whole asset management industry is under quite strong fee pressure. We see cost cutting, and not just in the asset management, also from a bank side. So you need massive investments for technology, which hasn't proven itself yet. And at the same time, when we still need to spend a lot on fixing the existing technology, and we're dealing with many counterparties, we're dealing with many custodians, so we have a lot of operational issues still which need to be addressed. So you cannot, unfortunately, switch just from one day to a perfectly functioning new system, not just because the system is not there, but because that's not how things work. So for now, it remains in the realm of dreams, kind of to have a completely new system which would be more efficient than the current one.
Yeah, and it does seem that the ones that have, the issuers that have done some experiments in this space have been more from the developed markets. I don't know if there's been many from emerging markets. Not really, I don't think.
Nothing I'm aware of.
Yeah, okay. Yeah, Trygve, I think you want to say something. Go ahead.
No, I'll just echo what Mr. Sabo said. I mean, we're a small issuer, so I think we would be very late adopting some of those technologies, just like Mr. Ryan said. Just the cost benefit would not be would not be so it would be too costly to do right now, considering how little we issue.
Yeah. Okay. Fair enough. I mean, you touched there on the need for other operational aspects need to be addressed first before looking at DLT, which moves on nicely to the other question we had on some of the risks that digitization of bond markets might cause, and that there was a large majority that highlighted operational security risks and hindering their sort of moving to this area. And is that something that you constantly get feedback from? I see from issuers that before they if some issuers that might be looking at digital bonds, but they're concerned about some of the security risk, cyber risk, settlement failure risk? Does that come up in your conversations with issuers?
Not so much cyber risk and security risk from that perspective. I think it's quite a safe technology and proven technology. And once you get through the IT questionnaires, that becomes fairly obvious. So I think it's not there. I think there's a bit of concern around the fact that these platforms are being created by banks and potential platform risk in terms of having additional counterparty risk or perceived counterparty risk. But I think the backup and fail safes that are built into these are extremely strong, that once those are explained to the investors and the issuers, everyone is very comfortable. So maybe a bit of concern from that perspective initially, but nothing that is lingering from that perspective.
Okay. Well, Victor, from an investor, I suppose, I mean, what are there other issues that you see that could be caused by digitalization of bond market? I suppose, liquidity fragmentation, is that a concern when you think about digital bond markets?
I wouldn't downplay the issue of security risk. I mean, obviously we are in a highly regulated industry, so any data leakage, especially if it relates to kind of financially sensitive data or client data, is key for us. So we cannot allow that. So we wouldn't go for anything which is not really kind of foolproof and can be managed in a secure way. That's not saying that there is no scope for adaptation for more digital technologies. And kind of you jump through the question of AI, for example, and I think there is indeed a possibility of deployment of more. And if I'm not mistaken, then Market Access, which is one of the digital platforms, already offers AI for traders to assess kind of the optimal size and optimal timing of trading, although it's only available or USIG bonds yet, but I guess it will be rolled out further. So yeah, there is clearly advances happening. We just have to be sure that we can protect our clients' interests throughout the whole process.
Yeah, I guess some of these other security risks come from AI as well. I mean, as an asset manager, do you implement AI in any of your work at the moment and your processes? Are you looking at it, or what stage are you at in terms of?
Yes, we have generative AI, but once again, quite strictly limited. So everything we do is kept within our own infrastructure and in the cloud. So it's not shared even with the companies which actually provide or develop these tools. So we just take the technology and we use it. But as I said, it's extremely strictly contained on what can go up. And then we make sure, once again, that sensitive data and any client data would not leave our own infrastructure.
Yeah, because I suppose AI could be a good way of addressing some of the things talked about before in terms of the natural language processing for
Indeed.
legal documentation and such. I don't want to come to you, Antonio. I haven't come to you for a little while. I mean, do you have any thoughts on what we've been discussing recently in terms of the applications of DLT AI? Are these things that you're looking at, or is it too early for you? What are your thoughts?
Well, no, I think, most of our investors, we are a very conservative sovereign, so most of investors try using traditional platform. We feel comfortable working on that. In terms of new technologies, just to be honest, is in general terms, is not on the table right now, because we feel comfortable to see, first of all, when we change, first of all, we would like to see what other benchmark sovereign benchmarks do, or if they start to implement this technology. Of course, we will put in contact with them and to try to learn the space. And then also, I think, I'm not sure, but I think I have some legal restrictions in order to go further with or to implement this technology, if that's the case. First of all, I think we should explain internally to our legal counsel, and then if we go ahead, thinking in the medium term, not in the near term, if we go ahead, first of all, we also some legislation or some internal regulation should change previously. So I think as an issuer, sovereign issuer, we need more time, and I do not see any movement in the very near term. But of course, for us, it's key to see what other sovereigns do previously. You know, it's something that it is easy also to follow and to explain here internally, because we have to explain to the authorities, to the regulators, and so many public organizations here. So we feel comfortable to still be more conservative.
Okay, thank you. Just a reminder, we are coming towards the end, so if anyone in the audience, the virtual audience, does have a question, feel free to post that in the Zoom chat, or put your camera on and ask the question direct if you've got any comments or input to make. I mean, it's quite interesting if there are any sovereigns to share some of their experiences in aspects of DLT or AI, if they're looking at ways to adopt new technology. The last part of what I wanted to look at was the question we looked at in the survey of secondary markets. And as you saw earlier, the respondents highlighting their need for increased transparency and improved liquidity. Although there was sort of some responses here about reducing cross-jurisdictional regulatory complexity and reducing abusive trading practices as well. I want to turn first to Victor on this. Firstly, did you sort of agree with that? I mean, and also, what in terms of secondary bond market needs to be more transparent as well?
Yeah, I think that's an extremely important and interesting question, and it is not really easy to answer. I mean, obviously, we all want to have more transparency, and indeed, what we see on the market, and I'm talking about emerging markets here especially, is the accuracy of pricing is not perfect. So occasionally there is low visibility, and not all market participants are looking at the same runs. Not all of them have access to the same information. People use different feeds, which might provide them with different information. So the pricing is occasionally is opaque. You don't see the deals which are actually happening. So it's not like on the equity market you're seeing real time all the deals which are being struck. You can actually pay to some electronic platforms to get that data, but as I said, it's not freely available. But at the same time, you appreciate the lack of full transparency, because when it comes to trading large blocks of illiquid or less liquid bonds, which is quite often the case in emerging market, you know that actually having the information instantly spread to the market could be quite ruinous. So if we are selling a big block to a counterparty and others on the market would know that such a big block moved on the market at a certain price, many would, I think, instantly short the security, and our counterparty who had just taken off the bonds would be in really big trouble. So in that case, that information actually would be detrimental, would actually reduce liquidity on the market and not increase. So there is this potential negative effect, which can be quite painful, and I think we have seen in some instances that there were efforts made to increase transparency that actually has reduced the willingness of the sell side to trade and take on position and provide that liquidity and that transparency. So that somehow should be addressed. The way now it works, it's basically there is a bifurcation. There are electronic platforms which absorb a lot of the small ticket trades. Flow trades, they go fast. It's more transparent, and then you have the large block trades, the less liquid trades, which go through direct, and they are not so visible to the market, and their working order is kind of slower process, and basically, yeah, you have these two markets which kind of coexist and have kind of their separate roles to play. So I think because a couple of years ago, I was speaking a lot with European regulators who wanted to enforce full transparency on the bond markets, but I think their approach was really coming from the equity market angle. But you have to realize that the bond market is not the equity market. It's not the same. You have kind of a much more broader range of bonds. It's just one equity per issuer. You have a huge selection. There's different size, quality, everything is different. So I think to apply just a full transparent model on the bond market, although theoretically that might sound good, would just not work in reality.
Okay, thank you, Victor. That was interesting. And I suppose coming to Trinity as a smaller issue, I guess increased transparency and improve liquidity as well must be quite important for you as a less frequent issue when you come to the market, to sort of have that have that increased transparency in secondary bond markets.
Yeah, definitely. I mean, having some small issues makes the price not as transparent. So we talk a lot with our issuers and just to see what they think would be our prices right now. Well, in the domestic market, we don't have this problem as the market is very liquid, and we can just see instantly what the prices are, and we use the auction process there, so that's pretty transparent. But I would say yes, in the international market, it would help us as an issuer, as a small issuer. It would help us a lot.
And what ways can it help? I suppose is it mainly from a pricing perspective?
Yeah, mainly from a pricing, just to see how our spread could be right now, when would be a good time to go to market. But obviously, our issuers help with that a lot.
Okay, thank you.
Thanks, yeah.
And then Tony, same question to you. In terms of the secondary bond market trading, how important is increased transparency and liquidity for you as an issuer when you'll come to the market?
For us, transparency and liquidity is key, and we have working in recent months. One of the recent measures that we took is to potential underwriters to provide us the runoff on a frequently basis, and then we have we collect all the information and we put in to have the history, but then we encourage them not only to send us some indicative prices, but also executable prices, which sometimes makes a difference. So they have been working on that, and this is key for us in order to just to also to take the decision when it's a good moment to tap the international market as well. The other thing is that what we can do during the primary in the primary market when we issue the bond is try to atomize also the allocations and to have a very good mix between external investors in the global issues. Of course, in the local market we organize some but it's a small size and basically it's very concentrated in local big players. But in the international market, in the global issues, we think that we play a key role during the allocation, and that's why we encourage to underwriter to have enough time in order to decide during the date of the pricing which is the best allocation in order to provide more liquidity in the secondary market. Also, we ask the underwriter to show some support in the following days in the secondary market, just to and they have to prove to the Republic if finally they do, because it's something that we will to take into account for the next deal. So I think it's key for us because we are a very small market and sometimes investors have some concern regarding the liquidity in general terms. So we have been working and try to improve this issue, no?
Okay, thank you, Antonio. And we're sort of coming to the end, but Asif, I'll just come to you for the final word. If you could give a comment on the secondary bond market question based on what some of these what's been discussed here, but and also if you could sort of give us sort of an outlook in terms of how you see the inefficiency sort of being addressed in the near term, and you know, hopefully a positive outlook for everyone here as well.
Sure. I think on the secondary market, I think the data is there. The visibility, to Victor's point, is not necessarily always fully transparent for reasons he's very well outlined. I think for the more liquid DM, frequent issuer, sovereign markets, you have a huge amount of visibility. I think the frustration, however, isn't a tech problem there. It's more a liquidity where, you know, the screen prices might not be reflective of, you know, where things are trading in larger size, that I think some of the other issuers touched upon as well. And that's a function of liquidity in this day and age, which is a separate discussion around balance sheet and the side effect of some of the regulation that we've seen. But from a tech perspective, the data is there. It's just maybe not visible to everyone at the same stage, and there's reasons behind that. I think in terms of outlook, you know, I think there's the tech or the technology exists to make things more efficient. There has to be a level of consensus around how to approach changes, though, because otherwise you just have increased fragmentation, which is a step backwards, not forward. But I am, to your point, positive around the tech getting embedded into the process to make it more efficient. And, you know, forums and discussions like these hopefully allow for more people to come around a table, so that when decisions are taken, they're taken in a consensual way. That means less fragmentation for the market, which will be key going forward.
Okay, thanks, Asif. And yeah, just thank you to all my speakers here and for everyone tuning in. Hope you all found that useful. And yeah, and thanks everyone for tuning in.